Good morning and welcome back to The Rational Investor, where I like to talk everything real estate related, stock related, collectible related, and even crypto related. Today is Sunday, December 10th. I'm super excited to go over the portfolio I started for you guys. I hope you understand I really did start it for you guys on YouTube and the people watching. So sit back, enjoy. If you stick around to the end, I'm actually going to talk a little about crypto as well. So I'm kind of excited today. Sundays are becoming a lot of fun for me because I like going over this. For those of you who don't know me and are chiming in for or looking around for the first time, my name is Adam Kahn, and I'm the Rational Investor. I hope you're all doing well. Before I go over the portfolio I started for you guys, if you haven't already, do me a favor, hit the thumbs up button to like, take a second, hit the subscribe button. I really appreciate it. That helps YouTube's algorithm. If you're finding the content interesting, helps other people to find it as well. And I really appreciate that. I'm having tons of fun. I can't tell you how much I appreciate the people who are watching and making comments. It's really cool watching the channel grow. And even though I guess to some of you it's a small channel, to me it's doing incredible. I can't believe I have over 1,000 subscribers. In fact, it's like 1,800, and it's super cool. So thank you guys. I appreciate that. I'm also going to put a link in the description for opening an account in SoFi. I opened an account there with my son as well. If you guys put $10 or more in there, they're going to give you a free $25, and they're also going to put in a gift in the account I open with my son. He's 13 years old. I try to teach him about investing and saving as well, so it's kind of exciting. It's fun. We really appreciate that as well, so thank you so much. Um, anyway, I'll get into the portfolio, and if I remember something I forgot, I'll tell you about that as well. So, before anything else, little disclaimer: use all the information only as entertainment purposes only. You guys really have to do your own financial decisions, and none of the information provided today is financial advice. Really, keep that in mind. None of this is financial advice. I'm just sharing stuff that I've learned for entertainment purposes. I hope you guys enjoy it, and you need to make your own financial decisions. So I want to explain my goal reel first before I get into how we did this week, my little sheet on how we did. But my goal with this is to show people that investing is not scary, that it just takes getting over that hurdle, opening an account, and doing it. And what I suggest is put in little enough money that you're not too concerned whether it goes up or down. I try to remember anything that I invest, I could lose. I try to generally, when I put it in, I think I could lose half the money. It doesn't happen very often, but it does. I've picked a portfolio for what I'm using here to hopefully diversify enough that there aren't any big swings. But if the account dropped 20% or something, it wouldn't be the end of the world. And I hope that you guys see that, and it gives you the courage and the strength to go open up accounts and start investing. Because I think it's really important. And the younger you do it, the longer the time horizon you give, the better chance of it really growing into something you have for the future to give you some stability and help with retirement. When we get to the end, I'm going to use my very special crystal ball that I bought. I'm super excited about that, to look into the future to see what I can find out about crypto. I've been looking into it a little bit more again. Anyway, I'll get to that at the end of the portfolio. So as usual, I'll skim through the investments real quick just so everybody knows what's in the portfolio. I may not go through them one by one at the end. Well, yeah, we'll probably do similar. So I have ADM, which is Archer Daniels Midland, Amazon, Best Buy, Bristol Myers, Caterpillar, Enphase, FootLocker, Google, a stock that's a JPMorgan fund that's supposed to be for dividends and yield. The ticker symbol is JEPQ. It's a Nasdaq fund that sells covered calls essentially on the Nasdaq. We have Meta, which I still think of as Facebook, 3M, Altria Group, Nextera Energy Partners, Pfizer, Virtus Infracap Preferred Stock Fund, which also just is something that pays high dividends, ticker symbol PFFA. Qualcomm, QSR Group, which is a conglomerate of Burger King and I think Tim Hortons and a few others, Starbucks, Exxon Mobile, and Zillow. So those are the 20 stocks I picked. When I originally started, we bought approximately $500 each for a total of a $10,000 investment. Obviously, a little bit more some, a little bit less of others, and so far we're on week three. I'll I'll ruin the end of the movie right away. We had a huge week. We made $2 and let me see, 55 cents this week. But to be perfectly honest, I can't believe how much the account was up the first 2 weeks. I expected it to pull back, so the fact that it was flat or up a tiny bit is pretty exciting for the third week. Um, Makes me look better than I really am. A lot of this is just lucky timing. So Archer Daniels Midland, we have 6 shares of it. They're a food packaging and storing company. What I like about them is that I think it'd be hard to compete in that space if a new company came around. So I think they've got a good stronghold on it. It closed on Friday at $73.75. Now a little asterisk. I'm not 100% sure if that's where it closed or if it's a price it was trading after the close. So I use the number that's in my account. It should be close if it's not exact. Um, the week over week change is it was down $8.44 or $8.40. So far, we have a total profit or loss in our Daniel Midlands. We've lost 66 cents over the 3 weeks. Um, all of these are in alphabetical order. I didn't put them in any variation of what I like or don't like. I might make some comments as to that. So we have 4 shares of Amazon, which is one of my favorites. I'm not sure about valuation. It's had a pretty good run this past year. It closed on Friday at $147.42. But keep in mind, uh, I've always found the best way that I've invested, again, you need to do your own research, is just buying the companies I think are best and not trying to time it too much. There were studies when I was a kid where monkeys would throw things at a newspaper and pick stocks versus the top analysts. And, sometimes the monkeys won, sometimes the analysts won. So it's really hard to time markets so perfectly. If I'm trying to time markets, I try to use a Warren Buffett strategy in my mind. I wait for bad news to come out on companies I really love, and then I hope to pick them up inexpensive. But I'm giving things 5 years, 10 years. So they might go lower for the first year or two, or they might stagnate or whatever it is. But I hope over time, if a company like Coca-Cola comes out with bad news and it drops significantly, that maybe that's a good time to pick it up because in time that passes and it's still a good company. Anyway, we have the 4 shares of Amazon. The week over week change, it was up $1.28, and our total profit in the 3 weeks is $9.36. Best Buy. We have 8 shares of Best Buy. What I like about them is retail space has been really out of favor. It's a good example of what I was saying about Coca-Cola. If I started this account a little bit earlier, I might have picked Target because it was getting beat up, but they came out with their earnings. The stock shot up. I think I missed it by a little bit for the purposes of this. I actually own a good bit of Target as well. But in this account, I own 8 shares of Best Buy. It closed this week at $73.99. It was up $3.12, and for the 3 weeks, we're up $47.92, which is incredible for 3 weeks return on 8 shares of a stock. I mean, we're up almost 10% on it. Bristol Myers Squibb, we have 10 shares of it. It closed last week at $50.31. We were up $1.70 for the week and $9.90 for the 3 weeks. Just, I don't expect it to be a big high flyer like some others. I kind of think it's a slow and steady type of company. Pays an okay dividend as well. And I'll get to one. We actually received a dividend as well this week. But Bristol Myers pays, I think, 4 or 5% in their dividend. And I just think you might slowly get a decent return on it. Next on my list is another one that I think is in a good space, which is Caterpillar. I think it's really hard to compete with a company like Caterpillar. They make bulldozers and big industrial equipment for building, which I think most of you would know. Um, it closed last week at $259.50. It was up $4.02 for the week, and we're up $13.78 over the 3 weeks. Caterpillar is just one I like, and it pays a small dividend as well. Uh, Again, I hope to own it for 5 or 10 years and just see it continue to slowly grow, if not longer. I mean, I don't think about selling this stuff unless I'm in a position where I have to sell it because I need the money for something else. I really try to put my investments or my equity investments and things like that with money that I don't need. I try to keep, a savings account and a checking account just to cover my bills and live my life, and try not to watch this too much, even though I do it on the channel every day and I do the weekly updates on this account. For the most part, I just watch it out of enjoyment because I like to trade. But my suggestion is put the money away and don't really look at it and hope to wake up later down the road and it's worth a good bit. Anyway, next on the list is Enphase. We own 5 shares of Enphase. If you haven't watched the other videos, I bought Enphase because I recently put solar in my house, and 3 of the 4 salespeople went on and on how they have the best components and make the best products. So I don't know a ton about it. It's not like I'm into the solar space, but I also saw that the stock had dropped from like $340 a share to 80, and I figure that's a pretty good discount for something that all the salespeople are saying make the best product. So it closed at $103.01 for the week over week. It's down $19.70, but we're up $48.15 for the 3 weeks, which, similar to Best Buy, is quite a return for 3 weeks on a $500 investment. Next on the list is FootLocker. I love FootLocker, but mainly because the CEO, this woman, Mary Dillon, who took Ulta Beauty and really blew up their stock over the time that she was CEO, for them. She went over to FootLocker, and I figure sometimes, you bet on the person who had success somewhere else. The first year was a bit rough, but again, like I've explained, I buy this stuff for long term, and 1 year into it isn't really long term. So it closed this week at $28.19. It was down $34.54 for the week, but over the 3 weeks, we're up $137.64, which is crazy for 3 weeks. But don't forget, they had their earnings the week before this, which really shot the stock up because they did better than it was expected. Next on the list is Google, which YouTube. I love Google. I mean, I love the fact that it's YouTube as well. I see my son on YouTube. Like, he doesn't even know what TV is. The way that I watch TV, he watches YouTube, and he scans it and everything else. And I think it's just going to continue to grow. I think that's a great space. So we have 4 shares of Google. It closed the week at $134.99. They had a big day one day. They talked about AI. I kind of joked with my brother I could have a shoe store and I'd say something about AI and the stock could shoot up. I don't know. I'm assuming Google's been using AI ever since they had the search engine. So I don't know that this is any big new news, but it sure seemed to help the stock. For the week, it was up $12.12. It was down. We were down overall previously. So for 3 weeks, we're now up $5.48. The next on the list is the JPMorgan one I talked about, which is the Nasdaq covered call fund. Now, they're the one we got the dividend on. We got $4.22 as a dividend for the 10 shares that we own. And that's kind of how that fund works. It pays it every month, and not the same amount necessarily. It depends on how much it makes from selling the calls. For full disclosure purposes, I actually sold what I had of this in my main portfolios. Um, I didn't want to own any of the covered call strategy funds anymore. I don't like that it limits your upside, but you still have most of, if not all of the downside risk. And my real thought, if you haven't watched those videos, is I know how to sell covered calls myself. It opened me up to maybe I should be selling some covered calls on some stocks that I have, but that I don't want to own a fund that does it for me because I'm totally capable to do it myself, and I'm much more comfortable with that than a company that uses some strategy that everyone else can see what they do and kind of work against it. At the same time, I don't think there's anything wrong with it. So you need to do your own research and decide what fits for you guys. So JEPQ, or the JP Morgan Nasdaq Covered Call Strategy Fund, we have 10 shares of it. The stock itself was up $1.60 for the week over week, and we're up a total of $2.50 on it, as well as the dividend, which, that's good return for 3 weeks of something that pays a dividend. So I say this a lot of the time, but next on the list, which is Meta, is one of my favorite stocks. I mean, I like Facebook. I like that I think that nobody likes him. Um, so I figure the stock's always a little bit undervalued. I think Zuckerberg gets a bad name, but he's done incredible. And really, when I think about they own Oculus and all these other things, Instagram, I think WhatsApp is theirs, or I can't. I never remember if it's WhatsApp or WeChat, but but they're a behemoth and they make a ton of money. And despite the stock closing at $332.75 in terms of price to earnings ratio, it's not that expensive in my opinion, and it just keeps growing and growing. I think they have great potential because the one of the WhatsApp or WeChat, whichever one it is, I don't even think they've monetized it yet. So it's got a huge viewer user base, and when they figure ways to make that monetize as well, I mean, don't forget Facebook didn't monetize for a long time when he started it. My guess is that he just same thing as like what I said about Mary Dillon. Winners, like people who do well, they have a strategy and they do it over and over again. My guess is he has a way of growing that piece of it and they'll monetize it when the timing's right. So it was up $15.78, the two shares that we have for week over week, but we're still down over the 3 weeks. We're down $4 on Meta so far. Um, this one's been a real surprise. 3M has done exceptionally well. Those of you not familiar with 3M, they do a zillion things. You're probably familiar with it, you just don't realize it. They do post-its, they do, I think Scotch tape is theirs, if not a bunch of other tapes. They're in the healthcare space as well. But 3M closed at $103.37, which was up $17.40, and we're up a total of $41.85 for the 3 weeks, which is crazy because 3M is like a boring type of play typically, and they pay. When we bought it, I think it was paying a 6% dividend. It's probably five and change still, which generally it's a low dividend, slow growing type of company. It's pretty amazing that it's up close to 10%, and you're going to get the dividend payments when they come around. Next on the list is Altria Group. I'm sure some of you have an issue that they do cigarettes. I try not to be opinionated with good, bad, whatever. I really look at investments as investments. And if I have an issue with cigarettes, the money I can make being invested in the company, I can use again, to do something against it. That's really how I think. Anything that I'm not a fan of, if it's a good investment, if I make money in that investment, I can use it to fight that product. Anyway, Altria Group closed the week at $41.30. It was down $14.85 week over week, but we're up $7.15 over the 3 weeks. Keep in mind, Altria pays over 9% dividend, which is the real reason you buy it, to get that dividend yield, which is, I think most of you know, I love my dividends. Next on the list has been one of my favorites of recent. It's not like a long term favorite, but Nextera Energy Partners, which we have 20 shares of, closed the week at $25.99. It was up $15 this week for week over week, and we're up $59.40 with no new news over the 3 weeks. Uh, I really think Nextera Energy Partners is going to continue to creep higher. They've dropped from $80 a share to they closed at $25.99 because they initially just kind of naturally fell from 80 to like 50, but then they announced that the rate that they would increase the dividend is going to slow. They didn't announce that they have to cut the dividend or they're going to slow it down. They announced that the rate of increases is going to slow down because interest rates have gone up so much. Well, the stock then plummeted from 50 to about 20. I don't think there's any underlying problems outside of that, but be aware that a lot of times when stocks just start going lower, they continue. Now, I picked up a good amount because in the 20s, it's paying like 13% dividend, and it got to where it was paying a 15% dividend, which is incredible on top of the fact that they're talking about raising it 5 to 8% year over the next few years. And I think that's really good return at this point. You know, it works kind of like a bond. In terms of the price, it's the inverse relationship to the yield. So as the stock falls, it pays a better return because you're getting a fixed dollar amount of dividend. So maybe there's underlying issues. I see it as a bit of a risky play, but if not, I think it's a bargain at these prices, and I'm really happy with it so far. Next on the list is Pfizer. Similarly, it's fallen a good bit in price. It fell from like I didn't look at the highs, but I want to say 50 or 60 down to 30. With COVID not being as big an issue, and they're not dispensing the shots anymore, or if they are, that's very rare. They've lost that revenue, but they're still a big behemoth in the drug space. So I just picture they're going to slowly continue to grow over time. They pay a 5% dividend where they are now. They closed this week at 28.78. We were down $1.95 for the week, and we're down $16.50 over the 3 weeks. Um, Again, it's just a long-term hold. I picture you wake up in a couple of years and it's at like $36, and it doesn't seem like a whole lot, but that's 20%, and maybe you've gotten your 5% dividend in the meantime. So after Pfizer, I've got Qualcomm. Again, just remember it's alphabetical. It's not in any particular order other than that. We have 4 shares of Qualcomm. I just like being in the chip space. They do the chips for your cell phones and stuff. They extended an agreement they have with Apple till I want to say like 2027, but it might be 2026. They've also raised their dividend every year for the past 21 years. If they make it another 4 years, they get entered into what's called the Dividend Aristocrats, which I think there's actually a fund for that. And if they get put into it, that'll give a little bit of a boost. Now, that's 4 years away, and I don't know that you invest in it because of that. But I've always liked Qualcomm for whatever reason. It closed the week at $132.97. We were up $11.88 week over week. And over the 3 weeks, we're up $14.12. QSR is next, which is what I mentioned, the conglomerate for the food companies for Burger King and things like that. I don't expect to have some big, huge increases in the stock prices. Again, this is just another slow mover. I find that, turtle and hare, slow and steady, tends to win the race. So I like this company. We have 7 shares. It closed the week at 71.91, which was down $7.63 week over a week, but over the 3 weeks, we're still up a little bit. We're up $7.42 in the 3 weeks. Starbucks, one of my favorites, but it's been having a really rough run since I started these weekly videos. We own 4 shares of Starbucks. I hope you all know what it is, and I hope you all go drink there, even though I don't. I'm so cheap. I use my own Nespresso and I fill it with my own coffee just because I do the math, and I spend 30 cents on it instead of $5, and I hate to be so cheap. I just can't help it. So Starbucks closed the week at $96.61. We're down $10.96 for the week, and it's down $34.12 for the 3 weeks. I actually talked about buying another share last week. I never did. I'm kind of glad because it's just been the worst performer. Probably should, but I'll sit on the cash for a little while until I come up with something I really want to put it in. Second to last on the list for no reason is Exxon Mobile, which hasn't done so great for the portfolio. It's done the second worst after Starbucks. We have 4 shares of Exxon Mobil, but I still want something in the oil space. They pay a decent dividend. It closed the week at $99.50. It was down $14.16. And for the 3 week period, we're down $24.12. And last but definitely not least is Zillow Group, which is we've had a really good run with. We have 10 shares of Zillow. It closed this week at 46.41. It was up $29.10 on our 10 shares. And for the 3 weeks, it's up $73.20. The reason I like Zillow is I'm in the real estate industry. I do mortgages for a living, and I picture a company like Zillow really taking over the real estate market share. If they're smart about it and they have the right people in place, I figure they're going to pay young new realtors a salary instead of them getting a commission, and be able to work this Zillow Direct or something else where you can really save a ton of money on how much you get, how much you're paying your agent and everything else. They'll have employees that it won't be as great a service you get from your agent now, because they're really good at what they do and people don't get that they're really worth their value. But people don't understand it, and I think the client's greed is going to cause them to think, well, if I only pay X, I'm saving so much money. May not be saving so much money, but I think that allows Zillow to get in the space, and everything will be in house. They'll do their own loans in house. they'll have an appraisal and inspection in advance so that it'll work like they'll just be a fixed price. There'll be no negotiating. Buyers can see the inspection. They can see that the repairs have been done on the inspection. They'll have the appraisal so they can look at it and know the price. It'll just be a different process that won't have as much smoke and mirrors that we have now. I don't know that that'll happen, but that's my vision and shows how my crazy brain works for what I think of Zillow, and it's why I picked it. It and FootLocker were like the two that I felt like were the gambles of these, but the rest of them are pretty boring, safe stocks. Again, you have to do your own research. This is not financial advice. I'm just sharing my information. But what I hope that this does for those of you who've lasted this long, and I'll get into crypto if you've stuck around. What I hope this does is it shows you that it's not so scary. We've been in 3 weeks. We're now up $420 for overall, which, it doesn't always go up like that overall, but percentage wise, it's 4% in 3 weeks. We haven't had any big scary swings. Maybe one stock has moved a decent amount. It could move down if it's moved up. But overall, when we spread out, there should be some ups and downs, and it's not that big a deal. It really isn't so crazy. I hope that this comforts people. If you don't know how to open an account, click on the link I put in the description at SoFi. Just take a look. And if not, I can talk to you if you want to use another company like Fidelity or E-Trade or whatever. I'm happy to talk you through it. I mean, it's just putting your name and information in. The other thing is if you have a good amount of money and you need a financial planner, by all means, put your information. Let me know. I'll share mine. This is not Miss Mary. There is no promise of making a gazillion dollars on nothing. This won't be any crazy investments or anything else, but I'm happy to share the one I use. And it's in an account where I put the bulk of things that doesn't even allow online trading or access or anything. Like it's out of sight, out of mind type of thing, which for me in particular is super important. I have a small trading account. I've done this one for you guys on YouTube. I have a Dividend account, but for the most part, I put things away where I can't see them and they can't be touched. A, because I'm security reasons, and B, because if I don't watch it, I don't worry about the ups and downs. It really is meant for the future, my wife and my kid, um, and things like that. So stick around. I'm going to hit pause for a second, and then we're going to talk about crypto. So here we are, and I'm going to look into my crystal ball. Forgive me, it's a small one and it has cracks, so it's hard to see. But I'm going to talk a little about crypto today because I'm recognizing that crypto to me is probably like the internet when I was in college. I don't really understand it, but I remember Sun Microsystems, or whoever they are now. I think that's Adobe at this point, but I'm not even really sure. They had this commercial of this little girl running through a field, and I still picture it. And she was just going, "It's coming, it's coming." And then at the end, it would be like the internet. And I, really, we had no idea what it was. We might have been able to go online through AOL or through this portal where we could get into the library and find books. Not that I ever really, my mom would make fun of me because I don't even remember where the library was. I used it so little. But it was before we understood what the internet was. I kind of picture that with crypto. And I think the people, if you watch the videos and listen to it and talk about it, like Bitcoin is the first person to person ability to send money without any other third party. No banks, no Western Union, no nothing to any country, anywhere, anyone. If I needed to send money to some guy in Guam or woman, that you can with just a computer or internet access and pressing of a few buttons. And over the years, with the Lightning network that's come out, not that I know what that is, I'm talking out my butt, that the fees to do this stuff have gone down dramatically. My guess is as time evolves, we'll all understand it better. But in terms of an investment, if you get in before everybody understands it better, as more and more people throughout the world go into these things, it'll continue to increase in value. Um, I wouldn't put any amount of money that I'm not really ready to lose. It's a super scary field. But I also think a really small investment could really pay off. I think about where Microsoft was back in the late 80s, early 90s, and my college roommate talking about it. And my guess is if I spent 500 or $1,000 back then, it would probably be worth $1 million or something today. It would really be worth a ton. Uh, I I kind of wonder if the crypto phase is going to work out the same way. I try not to go too crazy and pick up a whole bunch of them, but the more I think about it, the more I think it's real and it's going to continue, and the world eventually is going to understand it, even though we don't yet, myself included. So I am not some crypto, what's the word, zealot or whatever you say, saying, oh, you have to this or it's going to be. But my real thought is if it becomes anything close to what the people talking about it think, a little bit of investment really could turn into a huge return. So even myself, I want to put a little in and not pay attention. The ups and downs are really big. And as a trader, watching it go from 16,000 to I think it's around 44,000 yesterday or today, and nobody really noticing or talking about it the way that they were, when it boomed up to 68 or 66,000 or whatever the highs were before. If it keeps creeping with nobody paying attention, when they finally pay attention, it's going to be 100, 200,000 per coin. And it may keep having these huge ups and downs until it has some understanding of what it is. And then everybody going, oh, now I get it. So I think it might be worth, if you have a few dollars to throw away at a total gamble. I think that's a really good gamble. I think it might continue to outperform the other things out there. And if you're a gold bug, what a better gold bug. I mean, I couldn't imagine getting on a plane with a few pounds of gold because I need 50 grand or whatever big number it is, because these, really, I don't want to, these really, people who believe in gold and silver and platinum, like, I just can't imagine carrying that around versus getting on a plane and just needing a computer wherever you go to be able to access it. It's really interesting. And I think that blockchain and these things are probably here to stay. They've been around close to 15 years now and continue to get higher. Also, next year, from what I learned, is going to be another halving, which what was explained to me about that is it means the ability to mine gets cut in half, and it means it makes less supply coming to the market, so it affects the supply and demand. Bitcoin's limited, from what I learned, to only 21 million Bitcoin. So the people who buy it and store it and consider it a store of value, as a percentage, they're actually going to have a legitimate percentage of that. I mean, if you had a whole Bitcoin and there's only 21 million of them, that's an actual real percentage of that market share. I mean, go look up how many shares of any of these stocks there are, and I'm guessing it's a good bit more than the Bitcoin. Anyway, again, like I said, it's super risky. Please don't take my advice on it. You have to do your own research. None of this is investment advice. It's just conversation for entertainment that I hope you find interesting. And if you haven't already, do me a favor, hit that subscribe and thumbs up buttons. And thank you so much for watching this long. I'd be really floored. Make a comment. Tell me you made it to the end. That would be so cool. So, anyway, have a great day. Enjoy your Sunday. I'm going to go get ready and hang out with my family, and then I'll probably talk to you guys tomorrow.